One possibility is to use the power of materials to turn seawater into drinking water. Meet reverse osmosis membrane technology by Toray. Materials can change our lives. Toray.
Agreed to sell assets to a Chinese firm for $900 million, but local investors exercised a preemptive right to take control of the business and then agreed to sell to Glencore. The data center company Switch raised $531 million in the third biggest tech IPO of the year. Shares sold above the marketed range and begin trading today on the New York Stock Exchange. Switch designs, builds and operates data centers. It's been profitable for at least the past 4 years. And Oscar-winning movie mogul Harvey Weinstein has taken a leave of absence from his production company over sexual harassment allegations. According to the New York Times, Weinstein has reached at least 8 settlements with women claiming that he harassed them. Actress Ashley Judd was among those, saying she'd been harassed. And that's your Bloomberg Business Flash. John.
Emma, thank you very much. The jobs report then just 6 minutes away. They will be released very, very shortly. The numbers will drop right here on Bloomberg. Joining us now with a preview in New York to give us his insight on what to expect is Brad Bagdell, Jefferies FX strategist. Brad, futures dead flat, euro dollar dead flat, treasury yields higher by about 2 basis points. How on earth do you trade a weather-impaired number that's going to drop in a couple of minutes?
It's not going to be easy. I mean, there's going to be a lot of noise in there. I think traders are going to look through the headline NFP number as just a bit of noise related to the hurricane. I'm going to focus on average hourly earnings. I still think that's going to be key, obviously, as an indicator for inflation pressure in the economy. The underlying jobs data over the last several months has been very solid. Employment in this country is very solid, and economic data in general has been quite solid as well. So we're sitting on a pretty firm background in the U.S., and I'm going to be focusing on average hourly earnings just to see how that inflation area is trucking along.
Brad, I don't know if we can call it an estimate. We'll just call it a guess. What is your base case going into the payrolls report?
Headline, Jefferies is at negative 45K, but on the average hourly earnings, we're in line with consensus 0.3 and 2.5 on the year over year. So, again, very noisy on the headline, and we'll see what we get.
You guys are the low estimate, I think, in a Bloomberg survey as well. Alan, for the people on the outside looking in, why is the wage growth number more reliable in this jobs report than the headline hiring number? Why are they both not weather impaired, so to speak?
Well, there will be a small weather impact on the wage number, but it'll be small. And what's going to drive the wage number is what happened to wage growth for people who were employed over the month, and that's the bulk of the labor force.
Brad, when you take a look at the dollar, we have a relatively stronger dollar across the board. What happens if we do get a better number? How much more upside can we expect?
We've been on a nice steady grind for several weeks now, and that coincided with a shift in Fed views, along with an improvement on the Trump approval ratings as well. I imagine we're going to continue to grind higher. It's really going to take a big surprise to shake this market up, probably on the average hourly earnings front, if anything else, as the market will look through some of the noise on the headline number. But if we were to get some big extreme on the headline number, that would potentially rattle markets a little bit and maybe cause a little bit of dollar selling going into the weekend. But I imagine we're going to continue to grind higher in the dollar, just given Fed expectations in particular. Every Fed speaker that we've been seeing has been towing more of a hawkish line than they've used to do. So it seems to me like December is almost a done deal at this point.
How do you wake up your capacity to see more?
It could be the best part of the painting. Maybe I have to destroy it.
What is the future going to look like?
It gives more of an impact if you do it from within.
You have to go all the way. It's difficult and it's hard.
To be an artist, it's a destiny.
Brilliant ideas, powered by Hyundai Motor.
And that'll probably keep the dollar just sort of grinding higher from here over the next couple of months.
And how much was dollar driven as opposed to the other side of the trade? For example, the euro weakening some because of problems in Spain and things, or certainly the pound?
Absolutely. Euro and pound are both weakening on their own as well, coincidentally, so that's definitely helping the dollar. Dollar yen is rising. That's more of a reflection of what's happening with U.S. rates. But if you look at the broader dollar indices, the Bloomberg Dollar Index, for example, that's cruising right along. I mean, we bottomed out around 1150 or below 1150, and now we're back above 1170. So on a broad basis, the dollar is rallying, but euro and sterling are definitely helping the cause for sure.
Krishna, have we seen peak dollar weakness in 2017 yet?
I think there's a case to be made for that. Whether that is going to be the case in 2018 or not, I think is the real issue. For now, because December is pretty much in the bag, the likelihood that you see meaningful weakness in the dollar is pretty small. Having said that, I continue to believe that the likelihood that dollar strengthens meaningfully, substantially, I think is pretty low. And therefore, the attraction of emerging market currencies and emerging market equities in that context is quite good in my view.
Brad, just to wrap it all up for us in the next hour or so, which currency pair is going to be most at risk?
It's probably going to be dollar yen. Keeping an eye on that 113 area. We've been testing that a couple of days now. So going to keep an eye on that on the upside. Euro dollar as well on the downside. We did punch through 117 overnight, but potential for another run at that level on a dollar bid.
Brad Bechtel at Jefferies with the low estimate here at Bloomberg from our survey, negative 45,000, the median estimate 80K. Gents, thank you very much for joining us. To Brad Bechtel at Jefferies, to Alan Kruger at Princeton, to Krishna Mamani of Oppenheimer, as we count you down to the payrolls report, which drops in about 35 seconds. The scores as follows. Futures are just a little bit softer, down 0.1% on the Dow, off by 3 points on the S&P 500. We closed yesterday at an all-time high on an 8-day winning streak. The story in the bond market, a little something like this. Yields throughout the morning continue to creep higher by 2 basis points. We trade now at 237, and in the FX market, euro dollar going absolutely nowhere at 117.12. The estimate for payrolls is 80,000. The previous number 156. The jobs report drops right now. Here's Julie Hyman in DC.
Down 33,000, a loss of 33,000 jobs during last month. However, the household survey, the jobless rate, ticking down to 4.2%, and the average hourly earnings month over month climbing 0.5%, better than the 0.3% estimated. Year over year earnings rising 2.9%. Now let's break it down a little bit here because we're looking at a difference in surveys, right? On the one hand, you have the payroll survey and that loss of 33,000, which reflects folks who did not get paid during the week. However, the household survey, which reflects that jobless rate of 4.2%, reflects people who had a job even if they didn't get paid during the week. And there were 1.5 million people who did have a job but did not go to work for the entire week because of the hurricanes that we talked about. So as part of that jobless rate, the number of unemployed persons fell by 331,000 to 6.8 million. The jobless rate of 4.2% is the lowest since February of 2001. Food services and drinking places saw a decrease in payrolls of 105,000. Again, the effect of the hurricane. The biggest increases in jobs during the month, transportation and warehousing, as well as healthcare. John?
Julie Hyman, great work down in D.C. We'll catch up with you in about 30 minutes' time. So that wage number and that unemployment number and the participation rate, they're the positives in this report. But if you trade on the wage number alone, it's pretty clear what's happening. The front end of the yield curve, 2-year Treasury yield spiked that little bit higher, taking the dollar with it. So the dollar index rolls up, euro dollar rolls over. We're down by about 0.25%. Alan Kruger, I just want to get your reaction very quickly. It's a downside surprise on the headline hiring number, but that wage growth number, how significant is it?
I think that's the most important number in this report. The fact that labor force rose suggests, as Julie mentioned, that there were a lot of people who had a job but weren't able to get to work because of the hurricane. So I think fundamentally the job growth number is probably fine last month. The 2.9% wage growth that's the headline. And remember, Janet Yellen has said that in a healthy labor market, wage growth is between 3 and 4%. So we're just about there. So I think that Chair Yellen will look at this report and say, my understanding of the way the labor market operates is basically right.
Very, very close to a 3 handle on that headline wage growth number. Alan Kruger's going to be sticking with us. I'll just whip through the numbers for you very quickly. The estimate then for payrolls this month was 80,000. The print was negative 33. The previous month revised higher to 169,000 from 156 previously. The bright spots in the weather-impaired payrolls report, though, is the unemployment rate dropping to 4.2% and wage growth spiking much higher, 0.5 on the month, 2.9% year on year. Let's take the conversation to the markets now. We can send it over to Bloomberg Surveillance's Tom Keene and David Gura, standing by with a special guest.
Now on Bloomberg Radio, Bloomberg Television Worldwide, William Gross joins us. He is with Janice Henderson as we look at markets on the move. I know that on television, John Farrow and the team have been doing the market movement today, but yields higher, dollar stronger. Bill Gross, just simply, is it morning in America?
Well, it's certainly morning, beginning to be morning here in Newport Beach. I think to the extent that your question implies wages are moving higher and that, the average wage earner will make more and spend more, I think that's probably a positive. I note that the wages, Tom, were revised higher in terms of the last month, and so we have a 2.7% YOY and perhaps headed higher. So I think that's good for American workers.
Within this is a pretty good revisions. I mean, we revised up, I guess, pre-hurricane and that. How does Janice Henderson adapt and adjust to the hurricane distraction?
Well, you basically try and throw it out for a month in terms of the employment numbers. We're negative, as you mentioned, in terms of the job growth. So you throw that out. You look at the wages and you wonder whether or not that, to some extent, was affected by distortions, but probably not as much. And so this is definitely a situation here at Janus with analysis of the Fed, looking at the Fed, a rate hike in December. As long as financial markets remain firm, they certainly are. As long as wages begin to rise towards 3%, they certainly are. I think the Fed is slam dunk in terms of raising rates in December. Yes.
John, David Weston's giving me great charts on Bloomberg Daybreak on television, folks, of weaker Japanese yen. You've really got a jump condition to a weaker Japanese yen, and the idea here of a regime change. Bill Gross, not what you're going to do on this Friday morning in Newport Beach, but is there going to be a regime change within your Janus unconstrained fund because you're starting to get a little more lift and you're starting to get a little more wage growth?
Yeah, I think, unconstrained basically means that you're not constrained in terms of duration. You can do other things as well. The beauty of the unconstrained fund is it can go negative in terms of duration. That is basically looking for higher rates and making money off of higher rates as opposed to vice versa. And that's what, we've done over the past few weeks, certainly in Germany and now in the U.S. We're approaching critical levels. I think, Tom, on the 10-year, for instance, now probably at 240. I haven't seen it in the last minute. But now at 240, that we're at a 240, 245 critical level, a long-term downtrend line since the early 1980s, where interest rates have fallen by 20 basis points on average per year, and we're there at 2.40%. It basically means to me that, if the economy is strong, if wages are in an up move, then, perhaps we can break that trend line and move above 240. But for the moment, to me, technically, that's where we stop, at least for this day.
And this is so critical, folks. The idea of Bill Gross previously telling us 2.60%. Stephen Major of HSBC on this morning looking for, rates could go up, but then a damper. Let's take the word transitory, Bill Gross, over from yellow.
Line since the early 1980s, where interest rates have fallen by 20 basis points on average per year, and we're there at 2.40%. It basically means to me that, if the economy is strong, if wages are in an up move, then, perhaps we can break that trend line and move above 240. But for the moment, to me, technically, that's where we stop, at least for this day.
And this is so critical, folks. The idea of Bill Gross previously telling us 2.60%. Stephen Major of HSBC on this morning looking for, yeah, rates could go up, but then a damper. Let's take the word transitory, Bill Gross, over from Yellen.
Linked on a much shorter term basis. It's not to say that 5 basis points on the 10-year will mean 100 negative points on the Dow, but those things are connected. It's all connected. A recent last night article from The Economist in terms of the overvaluation of all assets, to my way of thinking is true. The low interest rates everywhere, and they're negative in many parts of the world still, basically have distorted prices in terms of equity, in terms of commercial real estate, in terms of spreads on high yield bonds, et cetera, et cetera. And so, yes, this is critically important on the 10-year to define other asset prices. Linked on a much shorter term basis.
In those old jump conditions that made you gray years ago. Which is it going to be, Bill?
I think stability, because not many people will believe me in terms of the long-term downtrend. They look at other things. They'll look at the Bollinger Band, and they'll look at the near-term stochastics, and so and the Fed will come in and try and talk markets down. So I think it will be a gradual up move, but to my way of thinking, if 240, 245. Don't let me hedge it here, but if 240, 245 is broken, to me that's a significant sign that the long-term bull market is over.
We're going to come back with Bill Gross.
That was Bloomberg's Tom Keene with Janice Henderson's Bill Gross. Let's recap the payrolls report. If you missed the numbers dropping 10 minutes ago, I'll whip through them for you. The estimate was 80,000 on the headline number. The print was negative 33K. The story, though, is in wage growth. It comes in strong at 0.5%. The estimate 0.3. That's month on month. Year on year, it comes in at 2.9%. The estimate 2.6. Just a smidgen, a slither away from a 3 handle on wage growth. A lot more to come on this program, including coming up Gary Cohn, National Economic Council Director, joining us from the White House to react to those payrolls numbers. That's coming up in about 50 minutes' time. You're watching Bloomberg.